following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search the Options Insider Radio in iTunes. And now, it's time to break down the options market. It's time for the Option Block. With your hosts, Mark Longo from theoptionsinsider.com, Mark Sebastian from OptionPit.com, Mike Tusaw from KnowYourOptionsInc.com, and John Griegas from Options Express.
Welcome back to the Options Insider Radio Network and our latest show, The Option Block. And I believe we're up to episode 5 or 6 at this point now. I think it might be 6, and we lose track.
I think it's 6 too.
Yeah, I think it's 6. It seems like we've been doing it forever. It's only been like a month, but if you count all the great sneak previews and things we did earlier last month and into this month, it's probably up to 10 or 11 now. So we've been putting out a fair amount of content for people, and for all those people asking, where is it on the other sites? You know, people who are Options Express customers obviously would like to listen to it on their website. Well, that stuff's all coming. It's being built as we speak, so hopefully you'll be able to stream it from their site very soon as well, in addition to already being able to stream it from my site and from downloading it and streaming it in iTunes. And I'm sure you guys probably link to it on Know Your Options Inc. I know, Mark, you do over at Options Pit, so there's a lot of places you can still find it. If you search for Option Block, you should be able to find. There's a lot of little audio destinations that have picked us up.
Mm-hmm.
There's the radio network goes out to quite a few little odd places. It's always fun to see where the radio content is popping up on any given day. With that, I think it's time to dive right into the trading block.
The trading block.
And today was a relatively interesting day. Getting into the broad indices don't reflect it too much. S&P closed up about 4 and the Dow about 52. So nothing huge on the indices, Mark. We saw some big news out of the existing home sales. I know, Tusaw, you're a big home guy.
Well, he's a big person. He's a big man. He needs a big home.
That's true. You were a lineman. What were you, a lineman or what were you, Tusaw? Linebacker, lineman? What were you?
I was a 300-pound offensive guard, believe it or not.
So you were a pulling guard, huh? All right.
That's right.
So
he was known for it.
Surprised Sebastian chimed in after that one. There we go.
I did kind of tee it up for him. And he didn't die. I guess he's showing some restraint today as well.
Well, he used to protect the quarterback. Now he protects quarters and nickels.
I guess his wife must be in the room. He's showing a modicum of decorum today or something like that. But yeah, a large man like you needs a big house, and today was a big monthly gain for existing home sales, up 10%, the biggest gain in 28 years. I think that would have jogged the market a bit more, but there's still enough uncertainty underlying that. I know the Fed's obviously investigating the foreclosures and all the scandals there, so that seemed to kind of really erode some of the bullish strength that we would have probably seen coming out of this number. Did you guys parse this new home sales anymore?
Oh, sorry. I don't think it's nothing. It's not very exciting from the standpoint that it's if home sales were increasing in value and people were selling them for profits, and we at least had some type of stability, then I think that we have something to look at. But the prices of houses are not at an area to where they're increasing. It feels like I was just talking with a friend of mine earlier today, and it feels like we're in 1994 again in terms of the pricing, not from the economic standpoint of 1994. It just feels like that's where all the prices are in a lot of areas around in the suburban Chicago area.
Yeah, that's true. Mm-hmm. We get an interesting perspective out there in Chicago, at least, because we have a little bit of a unique housing market down there. We also saw, I know, Tusaw, you probably were all over this today, gold up another 1% today, driven primarily by a weaker dollar. Are you still long gold across your myriad of customer accounts there?
In a lot of cases, yeah. I mean, we're gold is something to where we're very much fans of the collar, and just obviously everyone's situation is different. Gold is right for some people, it's not right for other people. But for the most part, what we're doing with clients is we're long gold and we have it collared because there's going to be a pullback at some point, in our opinion. When and how it's going to come, we don't know. But we think gold's a great play for the long term if it's hedged. And that's how we've been playing it. And if you look at it, it's kind of tinkering off a little bit. Like if you follow GLD, it's been around in the low 130s for a little over a week now, and we haven't had the explosive upturn in it like we have had the last couple of weeks. But yeah, gold is definitely with the sinking dollar, with G20. There's a lot going on right now with gold, and I still think it's going to continue to go up throughout time.
Yeah, well, one of the interesting things of a volatility perspective was that, despite the fact that, believe it or not, actually after the market we actually fell off a little more, but despite the fact that we're up most of the day, now about 3/4 of a point of that is from kind of the weekend pay effect, but volatility across the board at the money strike was up today. Okay, I noticed it in November in the SPX. I noticed it in Russell and the NDX. I took a look at it and saw it in the OEX as well. So we saw a true uptick in implied volatility in the front month. At the same time, December actually, kind of the second month out, was steady or actually flattening. So as per kind of our discussion from last week, we're actually seeing a little bit of a flattening in the term structure of the different months. We're seeing, maybe a little bit of a short-term bottom in the just absolute deduction of front-month volatility. And, I thought that was a really interesting point. Now, at the same time, we're seeing a little bit uptick in at-the-money volatility, but we're seeing kind of out of the money, we're seeing those vols get absolutely smushed, okay? Now, there are a lot of good reasons for that, but, I think it's interesting that the yield, the skew curve, which is the front, the curve along the strike, sometimes called SMILE, for SPX in November is at the flattest point we've seen since before the flash crash. So there's not a lot of heavy demand on downside puts is what that means. People are buying kind of at the monies, which, when you think about it, with vols at 16%, I don't see why you wouldn't buy at the money vol as opposed to some sort of out of the money put, right? There's not a lot of value.
Good chance to migrate some of your liquidity to some of the meatier options. We traditionally see people are in this kind of environment. There's no reason to be loading up on lottery tickets and that sort of thing when you can more reasonably afford something with a little bit of actual delta and gamma and vega to it. And so I think that's what we're seeing, and probably also seeing too maybe some of the stabilization and little uptick in the front month is people I think are starting to realize it might be a little bit overdone, especially with so much uncertainty coming in a week for what exactly is going to happen going forward. Maybe you shouldn't be hammering front month vol as much as they are, and maybe it is time to come in and scoop up some of these relatively cheap at the money puts just in case the bottom falls out next Tuesday.
Yeah, it's a good thing you kept you had a nice smooth line there. Otherwise, I totally had something for meatier options that I decided to let leave be.
Why am I not surprised that one of these days you are going to drive us away into the explicit tag there on iTunes. All of our little 10 and 12-year-old listeners will no longer be able to download us. And Daddy and Mom said, "Little Timmy, why are you listening to that explicit options program again? They're full of filth."
Well, yeah, no kidding. So,
I just thank God he doesn't trade naked options, folks.
Oh, Lord.
We don't see him at home in front of his screen, so we can...
Meaty naked options.
You should change the name of your site. There you go.
MeatyNakedOptions.com. I love it.
You probably get an explosion in business. It might not be the clientele you're looking for.
Yeah, I'm a little worried that of kind of where that search traffic will be coming from.
Just as we speak, I might buy that domain for you, just as an early Christmas gift for you.
Oh, thanks. I really appreciate that.
All right, before we get too far down this horrible rabbit hole, I know, Mike, you were also been keeping an eye on Ford lately, and you're saying they're pumping some more money back into Michigan. Is that correct?
Just what they did is they're investing some more money to pump back into some of their Michigan plants. And with what they're doing at Ford, it's kind of at the higher end of its range right now on the chart. And I think what's interesting about it is that I think that's a pretty bold move on their part in the economy, the way with which it stands. So either one that Ford obviously has some confidence in the Michigan labor force, so to speak, because they're pumping some money out there. Or they're just not making very smart moves. Now, typically, Ford seems like they've been weathering the storm pretty well throughout this downturn. I just thought that was kind of something interesting. Now, we don't have any clients in Ford at this point in time for long-term or short-term holdings in any of our managed accounts, but I thought that was definitely something pretty interesting with crude oil at $80 a barrel and with the economy the way with which it is right now. The fact that they're going to upgrade their facilities at this point in time and generate new jobs, I think that's definitely a pretty bold move right now.
I was keeping an eye on Ford a lot and actually trading them a lot earlier this year. I sold a lot of strangles on Ford for a long time into this year. I haven't been trading them much the last few months, but I kind of agree though. They seem to have weathered this storm fairly well, and they're making some interesting moves, kind of really reinvesting in their plants and infrastructure, but also in their designs. Their cars are coming out with some interesting new features. They have this I just rented a car last week for our trip, and it had that Ford Sync My Touch stuff in it. That was actually really pretty cool. And, it's the kind of thing where that sort of stuff is pretty interesting. You can kind of come in and it automatically senses and picks up your mobile device and pretty much can read your emails to you, and it becomes kind of a center of your mobile life, which I thought was pretty interesting. I only had the car for a week, but I thought that was really interesting.
Well, yeah, the Ford Focus was kind of a game changer. It was, one of the things that the American car companies have been trying to do for years was come up with a world car, right? And Ford had the Focus that was moderately successful as a world car, but the new Focus and the Fusion has defied, I think, even Ford's expectation on, its popularity and the market that it's gotten into. It's really just been a great car, and, it's just been trumpeted by the major magazines. And they were really smart with how they managed the finances. So, it takes a large amount of confidence to be willing to, put the Ford symbol as a leverageable asset. But, that was one of the things that really saved them. They put everything that they had up for leverage and borrowed at basically the absolute bottom of the interest rate, of the corporate interest rate market. It was brilliant. So that was. And
now they're putting $850 million back into it. Yeah.
Yep. Well, they're cash flow positive. They're paying down debts. And they're growing. Their new electric car is going to be really interesting. They've really been kind of the one people that haven't gotten married to one concept. They were kind of second banana with the electric, with hybrid, but still pretty quick. Scottie Pippen was the second banana, and he's still pretty good. And then being second banana, yeah, no kidding. Well, but it's when you're the second banana, and then the first banana has to recall 15 million vehicles. That's really good for you, right?
Yeah, Toyota got hit again this week. I mean, we can parlay that into Toyota as well. But, Toyota definitely is taking the hits, and it looks like Ford is definitely positioning itself to take advantage of that. Now, they haven't come up on our screeners in a while. Have you seen any interesting options activity out there in Ford lately, Mike? Are you even watching it at all?
I just picked this up today. I've been kind of just watching the stock itself, so I haven't been checking out the option activity for the most part on this, but...
Ford is heavily traded.
Yeah.
It is so for there to be a unique trade in Ford, there needs to be a huge trade because this just has, it's got massive amounts of open interest, about 3.2 million contracts. That is, relative to a lot of, that's a lot of open paper.
Yeah, there's a lot to move the needle out there.
Yeah.
We see, Ford is one of the more popular trades here at Options Express, and we see all types of bullish trades on it. Everything from selling put spreads, near term, far term, to buying bull call spreads, both near term, far term, both at the money and out of the money, believe it or not. In addition to buying just straight calls. I think what makes it attractive is the stock price. People seem to say, okay, the stock's at about, $14 a share. I know Ford. I had a Ford. I know someone that has a Ford. So, it's, I think it's a very investor friendly, stock to trade. And, maybe that's just the reason why that we're seeing it, in addition to, some of the good things that you guys are talking about.
Sounds like OX customers are joining the bull parade on Ford these days. Let me see. Where did Ford go out today? I didn't look at it.
14.15.
14.15.
All right, so they have moved up north a bit since I was writing strangles on them in the $10, $11 range.
That was actually one of the best trades I ever did when it was down at when it's down at $3, or actually it was like $2. My dad and I were talking, and I said, Dad, obviously I didn't do it myself. I said, Dad, I think Ford would be a really interesting stock to own a bunch of calls on because I don't think they're going bankrupt. And my dad said, Mark, I don't think they're going bankrupt either. So he went out and made a ton of money, and I didn't do it. I had a wedding dress to buy instead. So.
Those pressing concerns.
Well, I look great.
You could have bought a wedding if you bought the Ford calls.
Yeah, no kidding. But the good news is I looked spectacular in white.
I want to see
it really brought out my eyes.
That could be our front page of meatynakedoptions.com.
Me in a wedding dress.
It all comes back to the meaty naked options in the end.
I love it. So
when Toyota was in the news, more than it is now, I forget when those big recalls were happening, or the big news of the recalls were happening, 6 months maybe, or a year ago. I don't know how far I'm off, but we saw a lot of bearish Toyota trades, and it seems like those have quieted down. But Ford is still one that we still get callers consistently putting trades on, and the stock just really seems to be resilient and hold up, and people, it doesn't really shake people out. There are some positions and stocks, strategies that people can put on because everything looks very bullish and sounds very bullish, and any kind of hint of a pullback, people will, jump out right away. Not Ford. Ford seems to be, one that people are willing to, stick with their conviction on.
Because when you buy Ford calls, you're buying America, damn it.
Yeah,
you don't sell
right.
America, you buy America.
Yeah.
People have actually, said that, repeated that to me.
Really?
They have felt like they have done their duty, their patriotic duty. Okay, I'm bullish Ford, I'm buying Ford, whether they're buying the stock or the calls. They do hang up the phone and they say, well, at least I didn't buy Toyota calls. They do.
Right.
They have that sense of patriotism.
Do you laugh at them and tell them all the engines are pretty much like made in Bulgaria now anyway?
Yeah. Right. No, not at all.
Yeah. Probably wouldn't be good customer service.
Like I said, it's like a self-fulfilling prophecy sort of thing here that's coming along. They're just, they don't get scared very easily in this, and, they feel that they're doing their duty, and, it's not going to cost them an arm and a leg. So, hey, put the trade on and let's, go do something else. Something else I was just going to say real quick on Ford that kind of reminded me, when I talk to customers and what are some of their reasons, I think a lot of them feel burnt about GM, and they still want to participate, and there were a lot of people who were buying GM stock when it was really getting beat up, and, they just realized, okay, you know what, that's now actually in the cemetery, and they kind of have a bitter taste in their mouth, but yet, they kind of look, across the state and see, oh, okay, here's Ford, they're still around, they're still making money, they still make good cars, let's go along, and they do.
Well, the trading block has certainly turned into the car block tonight, but it's kind of interesting nonetheless. Once again, Tusaw taking us down.
The engine block.
The engine block.
Yeah, I was going to say, the engine block.
See, I didn't go for the obvious one. I went the long way home instead of the nice short way.
You're like Supertramp.
Hey, that's before your 80s time, buddy.
I know.
With all that fun, witty banter, we'll bring to a close this episode of the Engine Block. And now we will move right on into the Odd Block.
The Odd Block.
And let me just preface this Odd Block section by saying I have been traveling again today. So I'm not poolside in Florida any longer. I'm actually in New York for a buy-side equities conference. So actually, if any of you listeners are in the New York area and you want to swing by and listen to some interesting pontification on the high-frequency trading market and how that impacts options, swing on by. It's put on by World Research Group. Just search for Buy-Side Equities Forum, Buy-Side Equities Conference online. You should be able to find it. We're always happy to chat with listeners down there. But as a result, I'm not up in the old office studio ready to go for this show, so I'm kind of flying by the seat of my pants on this hotel Wi-Fi. But we're gonna run through the Odd Block nonetheless with some support from the rest of the team here. Starting out with AMD, Advanced Micro Devices. Always got to start with a nice, interesting tech name. They closed at 726 today, up about 37 cents, and we saw some interesting bullish activity. A lot of call buyers come into play today in AMD, particularly on the Nove 7 and Nove 8 strikes. The Nove 7 saw about 4,000 going up today, with 80% of those on the offer. So we saw a lot of bulls coming to lift offers in the Nove 7s. Same thing with the Nove 8s. Those were about 10,000, so 2.5 times as many of the Nove 8s were bought. 70% of those on the offer as well. Not surprisingly, we saw about a 4% pop in applied vol due to all this buying activity. Actually, by the time this was put together, the overall volume just for the day had already surpassed the average daily volume for AMD and got well past it by the end of the day. So definitely a surge of call buyers coming into AMD today. Stock was up about 4% today, and nothing seemed to be driving it. No particular news that I could see. AMD obviously goes back and forth with Intel in this ongoing processor war. They seem to be shifting their focus now towards the low power processors and the GPUs as opposed to the CPU. They seem to be ceding the high end of the computer market to Intel these days. So I'm not sure what these really bullish traders are seeing. Did you guys see anything out there in AMD that would merit coming into scoop calls?
Dead cat bounce. I don't know. This stock just got absolutely hammered, leading into kind of the September rally, and rallied with kind of everything else in September. Has since kind of started to flatline a little bit, topping out around just below 7.5. I just don't see a lot of good things for AMD. I mean, every time they go up against Intel, they just get destroyed. And every time Intel decides to go after something they're doing, Intel just works them. I think this might just be some momentum trading, and then possible people closing up some winners in the past. There was pretty big open interest on the Nove 8 line and on the Nove 7 line, so a chunk of this could be toward the closing side.
Yeah, that's what I was kind of wondering myself, because there is so much open interest there. It was hard to tell, especially early on when these trades are first going up, exactly if these were opening and closing.
How can you not read whether it's a buy or a sell on a penny-wide market? What's up? What's wrong with you?
Well, that gets into our conversation from last week again. So yeah, that's just some interesting activity going on, sizable activity at least, going on in AMD that we can't really see. We'll know more obviously when the numbers are out finally for open interest for tomorrow, so we can see if these are closing. But it looks like they might be, because I don't see anything else really driving this today. Moving on to one of your favorites here, Sebastian, Potash, P-O-T. They closed at 143.70, and this is actually one of the ones you sent in here. An interesting trade. I guess you can call this a ratio multi-strike risk reversal tied to stock.
Oh, yeah.
You got a trader coming in. He bought 4,500 of the Dees 150s for $4.50. He bought 800, an odd little number, of the Dees 155s for $2.85. Then he sold 1,250 of the DS 135 puts for $4.40. And to cap it all off, he sold 125,000 shares of the underlying at 142.95. So a tied stock, a tied trade, and it looks like he's just doing a kind of a ratio ladder risk reversal with stock.
Yeah.
And sizably, looks like a pretty sizable bullish trade, even with the stock component on it.
Yeah. Yeah, this sounds like a guy who possibly actually owns some stock, didn't mind taking some of it off, but wanted to protect himself from the upside, and didn't mind buying it back below 135. Or it could be a guy who just thinks they're going to get bought out, but didn't want to put on that much risk on the buyout. Certainly could be something related to that as well. But this has been a ridiculous war between BHP and POT. They've been going at it, and it's really interesting to kind of watch it develop.
Yeah, it's always fun to see these trades, how they're structured. This guy putting up so much size on the 150s. And I'll take 800 of the 155s as well. Just throw them on there. It's kind of like a checkout thing. I'll take almost 5,000 of these. Yeah, throw a couple hundred of those on there as well. Yeah. And then we'll hit the puts. And we'll hit some stock too. It's kind of fun to see how they parse out these trades. So yeah, that's an interesting trade. I'm not sure, Mike, you guys have anything you want to add to this really kind of bizarre ratio risk reversal? Do you guys follow Potash at all, or?
Yeah, no, don't spend a lot of time on Potash. But yeah, I think it's kind of like the first one that Mark had said, someone who wouldn't mind owning more stock at the lower level the way it was set up. It could have been a potential buyout, but I think I would lean more towards your first scenario, Mark.
Yep, I would concur.
And then jumping on to another interesting one, FMCN, Focus Media Holding Limited. This is a very thin one that has not, to my knowledge, come up on our screens before. And looks like they had a little sizable put spread going up here. The April 16/24 put spread went up for $2.25. Why don't you illuminate our listeners on what kind of activity you saw going on with that put spread?
Yeah, I was trying to figure it out myself. Guy came in and he obviously, wanted to, he wanted to sell. He sold the put spread. It was 280 versus 55, but I can't quite figure out how he picked his strikes. That was the crazy thing is, you're going to set up this thing, your downside's long at 1/3. It would make sense if he was buying this thing because I would have bet it was just him trying to cut the cost of a stock hedge, right? He's buying the 24s in stock. He owns the stock. He's buying the 24s to protect himself. Wants to cut down the price. Is certain it's not going to $16. So he sells the 16s, knocks 50 cents off of the price. When I looked at the trade, though, it actually looked like he was selling it. And so I'm not quite sure what his approach was. Did he just want to collect at least $2 a premium or what? But it certainly was a little confounding to me as to why he even bothered to buy the 16th. Maybe as a margin thing would be the other thing. Maybe he wanted to just dump a bunch of premium, but for margin purposes, he had to have some sort of protection against it. That would be another option.
Yeah, he needed a cheap out on the downside in case his margin or his clearing corporation said, hey, or his risk manager, hey, you can't go naked these 24s. You got to put something else in case this thing blows out.
Yeah. Well, I just pulled up a stock chart of this thing, and in July, this thing was trading below $18. So that could be his thought process here.
Yeah, so maybe he's wise to put that leg on then.
Well, the other thing, let's say maybe he's been selling puts on the way up, and month in, month out, he's selling puts, because this is something that we do from time to time, maybe not quite that far of a strike price away, but let's say that, just to kind of add on to what you were saying about margin, he sold the Julys, he sold the Septembers, he was selling it for maybe the 1750s, maybe the 20s, and then he keeps having these puts expire worthless, and the stock keeps rising on him. He still wants to have the same put-selling mentality or the same put-selling concept, but like you had said, it takes more buying power at the 24 level than it does at the 18 level, and he still wants to play the game, so to speak, and perhaps that's why he chose that strike price to hedge himself.
Now, this is an ADR for a Chinese LCD manufacturer. Not surprisingly, I don't follow this one on a regular basis. So
it's such a robust industry, right? I mean, it's the auto industry, it's the telecommunications industry, it's the services, it's kind of the services industry, and then you've got the Chinese LCD industry. You know, so
yeah, I don't see anything out here that would merit this kind of put spread action. How much size you say he did again?
$10,000.
He's serious.
Yeah, this guy's coming to play.
Yeah, I'm looking at the open interest, and that's almost the total. That almost eclipses the. It doesn't quite, but it almost eclipses the total open interest on the stock. Actually, you know what? There is less than 25 until this guy opened up a 10,000 lot put spread. Yeah, no, there was not 20,000 open interest. But if you can just consider it really a sale of 10, then he's about open interest, maybe a little bit less. So good for him.
Yeah, obviously is here to stay for a while. He's got a view on the underlying because he's not getting out of these options anytime soon unless he's trading with himself on the other end there.
Mhm.
And so yeah, that's pretty much all we have. Unless you had one more come up on your radar there, Mark, right? What was Checkpoint you were talking about?
Checkpoint.
Okay, right, yeah.
I've talked about this in thestreet.com today. Though the funny thing is, this used to be called Checkpoint Communications, and they're now, and this first time, here's how little this stock's been trading. I actually made markets in this stock in like 2004 and 2005. It had completely stopped trading, and I hadn't looked at it, and I did not realize they changed their name from Checkpoint Communications to Checkpoint Software Technologies Limited. Customer came in and bought about 9,500 of the Jan 2012 40 calls, into this kind of, as this stock is basically sitting at its 52-week highs. So my thought process on this trade is this guy really thinks this thing's going to continue to rally, and he's real bullish. So,
and this is kind of like a stock replacement, looks like almost at this point. If you're going that far out.
Yeah, that's exactly what I think he was doing with stock replacement, but didn't want to get burned if this thing was trading, below 30 again in a year. So.
Yeah, I'm looking here. Yeah, about 9,500 went up. Did it go up for about $6? These things.
$6.10.
Well, I guess he didn't work his bid that well.
He was not represented by Options Express, I would bet.
Exactly. Tim, you would have got him at least $5.90 on that, right?
Absolutely, at least.
Yeah, so this is the guy obviously looking to replace some stocks. He's got a long-term bet. He thinks obviously we're going to pass 46 in the next few years. And if you look at it in a long-term perspective, there's a significant amount of capital outlay required to put on a position on the 40s, or to buy the stock at 40. So why not go for the 40s and limit your outlay to $6 as opposed to 40? And you can put on the relatively same position with the same upside and a much less downside. So it makes sense if you're a size player and you want to put on a size long-term position in this stock. And with that, I think we're going to bring to a close this episode of the Odd Block, and we're going to dive right into the spread/express block.
The Spread Block, brought to you by Options Express. Options Express lets you trade futures and now foreign futures too, where and when you want. From advanced charting and free daily trading ideas to automated systems trading and free educational resources, Options Express is the online broker for all traders. Visit optionsexpress.com to open your free account. Futures involve substantial risk and are not appropriate for all investors. Please read this disclosure statement for futures and options available at optionsexpress.com/futures risk or by calling 1-888-280-8020 prior to applying for an account. Options Express is a member of FINRA, SIPC, and NFA.
This is the segment of the show where we discuss some of the interesting and unusual customer activity that's going on over at Options Express, as well as some of the interesting feedback that they're hearing from their customers right now. So, Tim, what are you guys seeing over in the OX customer book?
Okay. I may have mentioned it earlier, but I just kind of wanted to mention it again. We have a lot of traders basically still bullish on Apple, Baidu, and Netflix. They are bullish Google as well, but they don't seem to be having as much conviction as they do with the, Apple, Baidu, and Netflix. Some of the other things that we're seeing here is some bullish trades on crude oil. And I think that could be, maybe a dollar play, maybe a play on the shortages in France. Not that that's going to cause any, major disruption in the flow of oil, but, I think people hear on the news, okay, there's been some stoppage in imports of crude oil to France, and I think that's why, maybe some people are getting bullish there. We have some traders, also seem to be putting on a lot of bearish trades on, Bank of America. I'm not sure if they're, selling just the calls that they, had owned, or if they're selling some of these shorts, but seems to be a lot of volume in put buying in Bank of America, as well as a lot of volume in these calls, front month sort of dropping, and then finally we have traders who are trying to manage their cotton position. That's a real difficult one today. The cotton market, the cotton options closed, futures options closed. In that they had already priced in the options market another 2 days of limit up. So that was something that I haven't seen. I'm trying to remember if I've ever seen that before, where a market is limit up and they also close down the options.
Never got into the cotton. So, yeah, but that's definitely, if the options are pricing in a 2-day limit up, that's one thing to where, that's a unique thing in any market, that's for sure. You got to wait a cotton pick a minute on that. I can resist that one.
That's got to be a hard one as a market maker when you're guessing how many days you're going to be out of action and pricing that in. I don't know how wide the cotton options are, but you have to be pretty wide to price in that level of uncertainty, I would think. It's funny you should mention that too, because I think a lot of people probably don't think of Options Express as their go-to place for cotton options.
Yeah.
Yet you guys handle all that kind of stuff. So you guys feel a growing interest in some of these, I guess you can call them more esoteric commodities like cotton?
Yeah, absolutely. And maybe it's just because, my background and, start in a career was in commodities, but, that's kind of what attracts me the most, and something that I pay close attention to. So definitely, cotton, we have more people getting into that. In general, all the commodities. People are really bullish on commodities. Natural gas, we still have people going in and trying to pick a bottom in natural gas. So yeah, commodities is definitely something that, we are very active in. And we've got some very, very good commodity analysts as well. I just wanted to mention, too, there is an ETF on cotton, and the symbol on that is BAL.
Do they have ETF options on that as well?
I was just bringing that up here. Probably not. BAL has traded today. Let's take a look at some volume. 97,000 contracts. It's, on the Pacific. Let me just see if they've got any option chains here.
Yeah, I'm looking. I don't see any options info.
No options on BAL.
I know you guys have developed a lot of interesting cross-asset tools like the Extend platform recently. Can you execute the cotton options, I think, from Extend as well, as that require, actually going into the site?
That's a very good question. Primarily right now for Extend, the best use is going to be on equities and equity options. On some of the more popular futures products, you can and get the benefit of using Extend. Cotton options are traded in a trading pit, so there's no live bid or ask. So there's really no benefit to using Extend on something like cotton options. You're just you're never going to see it on cotton, on sugar, coffee, cocoa. We always tell the customers, give us a call, ask us, for a quote. We're going to call down to the trading floor. We'll get the quote. We'll come back and give it back to you. But as of right now, there's no real benefit to using Extend for the cotton options or most of those softs, I would say.
Yeah, that's true. That's one of the products that's still locked to the trading floor for a variety of reasons that we could fill a whole show with. But that's interesting, But that's something, as those things become more electronically viable, that's definitely something I think that will drive a lot more, particularly high-end retail.
Yeah. I was just going to say, that change that occurred in the gold and oil options, where they used to be strictly, traded in the trading pit, and now they're being offered on Globex. I think it has worked. I think it has worked for the market makers. I think it has worked for the brokerage houses, and it's also worked for the customers. But you're right. I mean, they just put both feet down and really don't want to budge at all when it comes to moving these things on the screen. Hopefully in time, there'll be some more volume there, some more there, and people can say, hey, I'm just on cotton, I can get a market right now, let's trade.
Yeah, imagine how many more people would actually be able to come play in these products. You hear so many futures firms and futures players and futures brokers and futures exchanges lamenting the fact that ETF options are eating their lunch left and right. At the same time, they resist simple things like that would really allow them to fight back against ETFs and be attractive to retail customers, and they just refuse to do it.
Yeah, I think they only have themselves to blame on that.
All right, Tim. Like I said, I don't think our listeners think of Options Express as their go-to destination for cotton, so we'd like to hear those kind of updates to remind people that there are other products in play there besides Google and Apple.
Sure, you're very welcome. Thank you.
And with that, we will move right into Uncle Mike's 2 cents, otherwise known as the Strategy Block.
The Strategy Block.
And welcome to the Strategy Block, and this is the segment of the show where we all sit down and listen to Mike Tusaw regale us with his sage-like wisdom on the market. What are we going to talk about today there, Uncle Mike?
We are going to go through money management today.
Should I get my checkbook out? Going to do like balancing the checkbook kind of thing? Is that what we're doing? Pay off your credit card.
No, but the Excel spreadsheet wouldn't work. Yeah, there you go. Pay off the card, pay off your house, and be debt-free within 2 years or something like that. Anyway, you see a lot of late-night infomercials talking about like the quick buck artists, the get-rich-quick style educators, and there's good ones and there's bad ones out there. Don't get me wrong. Oftentimes I've seen in this world, or in this education option retail world with which we live, you can make 10% a month. You can make 4% a month. You can make 5% a month. Yeah, that's kind of true. That's possible, but it's a half-truth. And I want to kind of go through this a little bit to explain the importance of money management. One thing that concerns me when I see an advertisement from someone that says, I've been right 5 months in a row, I've been right 10 months in a row, I've been right 20 months in a row. A couple things go through my head. For most people, the first thing that would go through their head is, yeah, believe them. But that's not the first thing that goes through my head. That's the second thing that goes through my head, actually. The thing that goes through my head is, well, he's probably telling the truth. And if he is telling the truth, then how much did he lose 21 months ago or 6 months ago or the last time he was wrong?
Exactly. When does he start counting? Exactly. That's the first question. Yeah, it is. And what's oftentimes when new traders and the retail traders come into this business, they look at the world through rose-colored glasses. It's not hard to make 20% on a credit spread in a month. That's not a hard thing to do.
However, it's an extremely hard thing to do it multiple months. So my point for today is that when you're coming up with a trading system for yourself, whether it's for short-term trading or long-term investing, factor in the fact that you will make 20% when you have a winning month, but also factor in the fact that you are going to lose 40% when you have a losing month, or 20 or 60, or whatever your number is. Count the losing months as well. When you go through it, I like to go a lot longer than this, but for sake of easy math, let's say that we look at this system for 10 months in a row. We need to have a long enough time frame to determine how many months we're going to be in whatever system we're coming up with. And let's say that we make 20% 5 times and then we lose 20% 5 times. Well, you have a break-even strategy. And let's say maybe we adjust it a little bit. We only make 18% on our winners, but we can actually make money 6 times out of 10 that time. And with that, maybe we don't lose as much in the times that we lose. And so overall, after 10 months, we had a 13% gain. That's the realism that you need to look at a trading strategy with. Now, typically, when you do this, you need to have the mentality that says you can be right 9 times out of 10 and still lose money. That's not hard to do. Let's say you make 1% 9 times in a row and you lose 20% on trade number 10, you're a losing trader. Even though you're right 90% of the time, you feel smart, you're losing money. Now, there's another school of thought. Maybe a lot of day traders are along this extreme to where you're wrong 9 times out of 10. Let's say you take a 1% loss 9 times in a row, and then on trade number 10, you hit a home run and you make 20%. Well, you're wrong 90% of the time, but you're ahead as a trader and you're making money. So the point that I want to make today, factor in the gains and the losses when you're coming up with a trade strategy. And don't look at it as just, oh, I could make 20% in a month, or I can make 10% in a month, or 1% a month for that matter. Factor in what you're going to make in the overall time frame of when you're going to do this strategy. And that's my 2 cents.
Yeah, I totally agree to that. I think I said it on one of the shows that, when somebody gets very excited and they sell this, credit spread, and my next question is, well, what's your risk? And they don't really know how to answer that question. I think just, number one, know your risk, quantify it, choose your time frame, and choose your risk tolerance, and have an order there to get out. But yeah, money management is very important, and I think something like you said, something that's overlooked by early traders, by beginning traders.
Around the block.
Welcome to the Around the Block segment. This is where we discuss some of the interesting things on the horizon for the next few sessions. And these days, it is all about earnings, even though today was obviously dominated a bit by housing numbers. But still, we have to see a lot of interesting earnings on the horizon. What are some of the numbers, or what are some of the names you guys are watching for your portfolios these days? Obviously, Tusaw, you're liking Ford and gold. What else are you looking at besides those two?
Well, just typically nothing too much on the short-term horizon. Just some things that we're looking at. Deckers Outdoor, we have some positions in that. EGO, Eldorado Gold, a gold stock. FSLR, First Solar, is one where we're just kind of looking at it. We're not in it at this point, but if it comes down, we might get into it after the elections. So in terms of like the individual names, Schlumberger, they just had they just had some nice news recently. And that's one to where if it comes down, we might consider getting back into it. So a couple things, but nothing that I would say would be the earth-shattering trade guaranteed make money right now trade. At least not in this episode.
First Solar, I thought we were all bulls on Solar Fund Holdings here.
Yeah, we're all big fans of Solar Fund. No, I think that the earnings that's gonna set the tone is what Microsoft has to say. And you can call them boring, you can call them what you want, but if they say, hey, PC sales are kicking up, or enterprise software is kicking up, or whatever, especially enterprise, that stock is that stock can drive a lot of things. people think it's boring, but it is still a huge, huge capitalized company. And that could be the one that that stock is really going to, if they come out and poo-poo the market, that will drive things down.
Yeah, no, they used to be the Apple of the mid to late 90s. They were just blowing through earnings every quarter and just skyrocketing. And then they started paying dividends and settled into this kind of range they've been in for the last 10 years almost. If you bought Microsoft at the end of the bubble, you haven't fared that well over the past decade.
I know.
But yeah, people kind of write them off now because they are so much of a boring company. The trend, the hot stuff is all with Google and Intel, or Google and Apple and all these other companies. But they obviously, like we talked about last show, they have capital and they're willing to put it behind their new ventures. They're putting $1 billion behind Kinect and Windows Phone 7 just for the holiday season to market those things. So that $1 billion, we're going to be inundated everywhere we go with ads for these things. That's going to have to move the needle. I heard an interesting stat today. Only 19% of phone users are smartphone users. So there's a huge, huge market of people out there who just haven't been hit yet with the right product, or they haven't taken that first step into the smartphone arena. So if Microsoft can come on strong with this kind of phone for everybody else thing they're doing, the Windows Phone 7, they could really light up the charts pretty big. So they're definitely an interesting one to watch. So when are they announcing, Mark?
On the 28th.
So yeah, we won't be. Too bad we won't be recording live for that one. That would be a good one to chat through while it was coming out.
Absolutely, that would be a good one to chat through.
So yeah, and aside from Microsoft, what are you looking at there, Tim, for the coming up in the around the block stuff?
In the round the block stuff, there's a couple things. We still have a lot of customers that are bullish on Apple, Baidu, and Netflix. I mean, that's just a constant flow of buys. We don't see too much. I was kind of surprised about the IYR. We rarely hear anyone doing anything with the, REIT ETFs, and I think that's probably been one of the better performers for the year. I think, across the board, just looking at a performance basis of, ETFs. Some of the other things that we're sort of, taking a look at and seeing is that some of the volatility in the bond options, futures products, have actually sort of calmed down. And the bond price themselves, the bond futures, the DEES futures, they've also started now to get into a smaller range.
Anything else we have left for around the block?
Well, just remember that we've got, new home sales coming out. You listen to Bill say he really watches that. And, if you follow Bill on Twitter, I think it's Bill Luby or Vixen Moore, every once in a while he'll post, hey, got long here, where he's bought stuff. And he's been right almost every time. It's been unbelievable. And we also have kind of, we've got Chicago PMI, Michigan Sentiment, durable goods, a lot of different things coming up this week. So, it's going to be a lot less boring, I think, than kind of last week where, last week was just basically the whole time. It wasn't really wasn't much to talk about. So we're going to have a lot of interesting news to go over on top of earnings. So should be really fun. And, just kind of keep an eye on options activity on November 1st and, on November 1st. And, November 2nd leading into the elections. I think the market, my understanding is the market really, really, really likes gridlock government. So.
Yeah, it seems to be. The old saw was, up for Republicans, down for Democrats. I think that has since been thrown on its ear. So I think, gridlock is the new bull.
Yeah.
Well, that's going to do it for this episode of The Option Block. I want to thank all you guys for downloading and streaming the show. Like I said, again, if you are in New York tomorrow or Tuesday, tomorrow's the 26th, come on down to the Buy Side Equities Forum. We love to chat with you and discuss high-frequency trading in the options world if you're into that sort of thing. If you guys want to hear more about Mike Tusaw's money management strategies, then check out KnowYourOptionsInc.com. Of course, for more of Tim's wisdom in the cotton markets, then go to Options Express or call Options Express and ask for Tim personally, and he will give you his personal strategies to excellence in the cotton market. Correct, Tim?
I will do my best on that to sort of, give you a little bit of knowledge about what I think or what we think here. We don't manage or advise, but I can tell you as far as execution goes, if you got an order in options in the cotton market, I am your guy to call.
And of course, if you want to check out Mr. Sebastian's little slice of insanity, it is optionpit.com or optionspit.com. A lot of the unusual activity we discuss in the show can be found on theoptionsinsider.com. And we want to thank you again for listening to this show. We'll actually let you know we'll be taping a little earlier this week, so we'll be taping on Wednesday, and the next episode will be coming out on Thursday. Thanks again for listening, and we'll see you next time on The Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved.